Hi there, and welcome to another Software and Internet Monthly Market Report brought to you by Sanford Advisors for the month of March 2021. It was an amazing month again for the M&A markets on the software side of things, with $31 billion invested in March, 167 transactions, which was a recent record for any month, and a 3 times average revenue multiple. You can see that there was also many notable transactions in the month, multi-billion-dollar software deals. So Calypso was bought by Thoma Bravo for $3.8 billion, and that, interestingly enough, was a 15 times revenue multiple. So one of the higher multiples that we're seeing out of the private equity guys right now. On the other end of the spectrum, McAfee, which was a $4 billion deal for their enterprise business, traded at 3 times revenue. So there's a lot of differentiation going on in the software markets right now, for sure. Probably a lot of that is due to growth. For those two businesses in particular, I'd imagine McAfee is growing at a slower rate than Calypso. But you can see here other deals precisely was at 5.8 times, and Thycotic was at 11.7 times. So some pretty healthy numbers across the board, and many multi-billion-dollar deals that happened last month. In terms of the context, like this is really like the number of transactions that happen every month, and you can see that 167 was a recent record, beating out the 165 that we saw in January of 2021. So this is a trend that we would expect to continue. It might go up and down a little bit month to month, but in general, we're expecting a very strong year for software M&A this year, with levels really recovering considerably from where they were last year. And then you can see the kind of geographic distribution. Not a surprise, 90% approximately is in the US and about 12% in Canada. So pretty consistent with what you would expect given the market sizing and everything between the two markets. But you can really see, in this chart, how this plays out in terms of where the year might finish up. Obviously, if you annualize the first quarter so far, you get to $280 billion of capital deployed in software M&A, which would be $100 billion better than the record year. So pretty amazing trajectory that we're on right now. And it'll be really interesting to kind of watch where this goes for the rest of the year. You can also see in terms of number of transactions that that is up considerably to over the 2,000 mark, which we have never seen that level recently either. So after a dip of 2019 and 2020, this is definitely an encouraging trend, and just in terms of the sheer volume of transactions that are happening. And you can also see the split here on the pie chart between strategic and private equity. So about a third of the deals are private equity and 2/3 are strategic. But I would say that underestimates the private equity contribution to the market a little bit, because some of those strategics are going to be private equity backed for sure. And so we are seeing definitely a lot of private equity activity and a lot of money out there from the private equity funds, and deploying it at multiples like we saw on the previous page that are very healthy and competitive with strategics. And then overall multiples on the non-SaaS side of stuff, just trailing around about 3 times, and on the SaaS side has bounced back to mid-5s, which is a very encouraging sign. I would think that for the rest of the year it stays pretty consistent with that kind of mid-5 median level that we're seeing right now. On the VC side of stuff, also a very good, strong month. Nearly $10 billion invested in March, 436 transactions, and the median deal size at $4 million. So lots of big transactions as well happening in the multi-$100 million range. So lots of capital being deployed here as well. And you can really see that here on this chart. So not only are the number of deals rebounding from where they were last year at the current run rate, but the dollar volume run rate is up considerably from last year. So at the current pace, we're almost on track to double what was last year, which was already a record in terms of capital deployed by the VC. So very impressive run rate that we're on. And lastly, on the VC side of stuff, you can see the valuation multiples. And across the board, they've continued to increase. So early, mid, and late, all in the 30 times revenue range. So very elevated. I would think that these kind of come down a little bit from here. I think it's probably a lack of data being so early on in the year that's kind of swinging this a little bit to the upside. But I would still expect very strong and probably better numbers than what we saw last year. Anyway, have a great month and look forward to seeing you next month.